Bitcoin is facing the $97,000 threshold. Data is cooling down, ETFs are experiencing outflows, and even DAT company is about to be acquired by a major player. Only the SEC has released some positive news, saying it wants to move away from enforcement-based regulation. With the implementation of the token graduation theory, does this mean the direction of crypto regulation is about to change? Right now, Bitcoin is at a critical point in the bull-bear cycle. It's Friday, November 14th, and this is the BTV Chinese channel, Billion Heizai. I'm Michael. Let's first look at the most important data from the past 24 hours, brought to you by Nexo. Nexo is a licensed exchange in Australia, and its advantage is that after entering Asia, it has been especially friendly to Asian users, eliminating many complicated procedures, plus assets stored on Nexo. You can directly purchase US stocks and other securities from capital markets, and by scanning the QR code on the screen, you can also get a permanent discount on transaction fees. After the promotional period ends, your UID can also be used to enter a lottery, with a top prize of 1,000. Alright, let's take a look at the 24-hour data headlines. This round of the US government shutdown has basically locked the market in a dark room. The October Consumer Price Index cannot be released, employment data is incomplete, and gross domestic product is predicted to possibly drop by about 1.5%. So Kevin Hassett, the chairman of the White House Council of Economic Advisors, helplessly said that this shutdown has cut off access to economic data. Even within the Federal Reserve, arguments have started. Neil Kashkari bluntly said, "With inflation this high, there shouldn't have been a rate cut in September. It would be best not to make any moves in December either." So as soon as he said this, the probability of a rate cut in December dropped to 50%, while the probability of no rate cut surged to 49.6%, almost a 50-50 split. As a result, sentiment tightened, and both the US stock market and the crypto market took a hit together. Bitcoin fared even worse, dropping straight below $120,000 with today's lowest point around $97,000. This is Bitcoin's lowest price since May 2025. Right now, the market seems to have entered a policy vacuum, with no clear direction. The market is being propped up entirely by sentiment amid policy fluctuations. That's why gold and government bonds are so popular right now, while Bitcoin can only wait until the Federal Reserve resumes work and the US government gets back to business to start rewriting the market script. Will the direction be up or down? I'll leave that to you in the comments. Yesterday's ETF data was truly a heavy blow to the market. Bitcoin ETFs saw an outflow of 867 million in a single day. Ethereum saw an outflow of 259 million, and what's more, Ethereum has been retreating a little bit every day for 5 consecutive days. It hasn't stopped. What's even more disheartening is that trading volume is also dropping off. At the beginning of October, trading volume was still between $9 and $11 billion. Now, by mid-November, there's only 3 to 5 billion left, which means the trading volume has been cut in half. So hot money is fleeing, volume is shrinking, and this is standard institutional behavior. In other words, don't ask me. I'm just going to lie flat for now. I'm not increasing my positions because there's no volume and redemptions are still happening. So right now, the state of ETFs isn't one of panic selling, but rather that no one wants to make a move. Everyone has collectively hit the pause button and is waiting to see which way policy will go. In this kind of atmosphere, it's really difficult for Bitcoin to try to break upward, because there's no capital to provide support anymore. Looking at the fundamentals, all the rebounds are just a last flicker before the end. Impressive, but not lasting. So for Bitcoin to truly reverse course, I believe it will still take some time. The good thing is, looking back at the past month, how has the Bitcoin market performed? In short, it has indeed dropped, but leverage just refuses to go down. The estimated leverage ratio has stayed between 0.23 and 0.24, just a tiny bit away from this year's peak of 0.28, so there's absolutely no sign of deleveraging at all. Now, even though the price has dropped below 98,000, no one has closed out their leverage positions. Everyone's leverage is still in place. All these positions have become zombie positions, just waiting for a signal from the market. So, based on historical experience, when leverage is high, it means the market is dominated by derivatives, and the liquidation points are densely packed like a minefield. Therefore, if ETF funds continue to flow out, if the spot market can't absorb the sell-off, then the key liquidation price could be triggered, causing a massive drop. This round of volatility could be so severe that it makes you question everything. Sudden spikes and plunges, rapid shakeouts, any or all of these could happen. The current market structure is like an extremely fragile cake. The key is whether Bitcoin can hold the price range between 96,000 and 98,000. If it holds, we can breathe a little easier, but if it falls below 96,000, that could be the prelude to a liquidation storm. Alright, please give us a like and turn on the notification bell. We'll help you keep up with the latest updates in the crypto, blockchain, and mining circles 24/7. You're also welcome to become a member. This month marks our 6th anniversary, and if you join as a gold member now, you'll not only receive a USDT bonus but also get exclusive channel merchandise. Alright, let's look at the news. This year, DAT has been incredibly hot. Ever since MicroStrategy started putting Bitcoin on its balance sheet, Bitcoin's price has surged, and the company's stock price has doubled. So, holding MicroStrategy stock is basically like holding spot Bitcoin. Many companies saw how well MicroStrategy was doing and decided to follow suit. Now, there are over 200 DAT companies, some focused on Solana, some on Bitcoin, and some on Ethereum. How much money has poured into this sector? $62 billion. But with this recent downturn, many companies just couldn't hold on. When Ethereum and Bitcoin dropped, it pushed a lot of companies' cost lines straight underwater. Now, these wealth companies have turned from treasure chests into loss-making positions, and investors immediately started questioning everything. Is the narrative around DAT companies really sustainable?
Think about it. The vast majority of capital flowing into this space is going into Bitcoin. We've gone from about 60 companies capitalizing on Bitcoin to 160 companies in just the past 6 months. So I'm laser focused on Bitcoin. I believe Bitcoin is digital capital.
Data shows that the majority of these companies' MAVs have fallen below 1. Except for some mining companies, exchanges, and early investors, the MAVs of most crypto treasury companies are generally below 1, including MicroStrategy. Although Michael Saylor does not face immediate pressure to sell Bitcoin due to strategy concerns, for companies with insufficient liquidity, high debt, and weak financing capabilities, their situation is deteriorating.
Bitcoin is becoming a mainstream asset, and what's different this year is the participation of publicly listed companies. So MicroStrategy and its imitators, who are essentially the equity capital markets right now, are wide open to crypto strategies, and that's been the hottest part of the market.
It was Sequence Communications that sold 970 Bitcoins in early November, redeeming about 50% of its convertible bonds, which reduced the company's total debt from $189 million to $94.5 million. The debt-to-net assets ratio dropped from 55% to 39%.
Actually, it's not that the company is struggling, but rather it depends on what assets you're holding. For example, MicroStrategy is very clear. They're holding Bitcoin, while those selling TAD are holding Ethereum, the two mainstream assets. And now Tom Lee has also released a message, more or less drawing the market's attention. He said that ARK, BlackRock, Vanguard, and JP Morgan have all bought shares of companies holding Bitcoin. The implication is very clear. As long as prices drop, but the company can withstand it and is favored by traditional institutions and included in their investment portfolios, there's still hope for the future. As for how long the current situation will last, it depends on when President Trump will introduce favorable policies. Do you all remember the last cycle's SEC chairman, Gary Gensler? Before he stepped down, he enforced regulatory actions. He once said that, except for Bitcoin, all crypto assets are securities. So, through enforcement-based regulation, over $4 billion were confiscated in a year. And now? The new chairman, Paul Atkins, had already said back in September, stop with the enforcement-based regulation. Most cryptocurrencies are simply not securities, and in the future, we need to help companies make on-chain financing more solid. So, as soon as this news came out, Wall Street immediately realized that this wasn't just empty talk. The market was about to change. On November 12th, Paul Atkins, during a public speech, officially laid out his stance on the areas he oversees, making the regulatory direction crystal clear.
In his speech, Paul Atkins noted that U.S. securities law lacks a formal legal definition for crypto assets. He then announced the SEC's preliminary classification framework, clarifying that classified assets are not definitive. The first category is digital commodities and utility tokens that use decentralized networks. The second includes digital collectibles like art, images, and in-game items. The third covers utility tokens that mainly provide usage value, such as membership rights, tickets, and access. This framework clarifies regulatory boundaries for assets without securities attributes.
It has to be said that Paul Atkins has redefined the attributes of securities for the crypto market. He pointed out that, for example, land itself is not a security, but if you package it as a fundraising project and get people to invest money, like with RWA, then during that period, it forms an investment contract and should be regulated as a security. But after the fundraising ends, land is still just land. No one can say it will always be classified as a security. The same logic applies to tokens. When a project is just starting out, the team needs to raise funds, write code, and make promises. So at that stage, it does look a lot like a security. However, once the network matures, power becomes decentralized, distributed ledger technology is in place, and the system runs automatically. Then, the investment contract has actually completed its procedural process. The continued trading of the token afterward does not mean that every transaction should be considered a securities transaction. And just because it was classified as a security at birth doesn't mean it should be labeled as a security for life. This essentially frees all crypto assets from that constraint. Here, there are myths of overnight riches, as well as carefully crafted scams. This is a dark forest of chaotic development, but it also nurtures the spark of hope leading toward the light. The destination of faith is freedom, and the endpoint of consensus is equality. BitcoinTV, guiding you through the fog to see the future, and helping us all gradually become wealthier together. Regulators are penetrating privacy, which is why the market cap of privacy coins has surged to 28 billion. With privacy coins making a strong comeback, should you buy Coinbase first and then accumulate Bitcoin? Central banks around the world, led by the Czech Republic, are all testing the waters with crypto assets. Looking back at this past week, no one could have imagined that these once disdained privacy coins would make such a kingly comeback. The entire sector's market cap has now reached between 24 and 28 billion US dollars, a true rags to riches story in the crypto world. ZEC, or Zcash, is even more outrageous. In July 2024, it was $20, and now it's over $600, a 30-fold surge. But as I've mentioned before, Monero is bound to catch up. You can see these two brothers leading the entire crypto privacy sector to outperform the broader market. So up to now, this explosive rally in privacy coins is very closely related to the US Department of Justice's precise seizure of 1.27 million Bitcoin from the Prince Group, because everyone has come to understand whether privacy coins are important or not, whether they can be listed on exchanges or not, that's not the main issue. The real priority is whether you can truly own your coins at all times.
The rebound in privacy coins is not surprising. While public blockchains like Bitcoin are open and trustworthy, all transactions are fully trackable. When combined with data, both asset scale and transfer direction can be identified. As regulatory technology advances, the privacy curve of transparent chains becomes more pronounced, driving ongoing iterations in privacy technology.
Crypto without privacy isn't really crypto on multiple levels. I mean, even the word crypto is derived from Greek. The word itself means hidden or secret. Yet today, crypto is actually more public in the sense that I can see anyone transacting on-chain.
Relying on obfuscation mechanisms, Monero uses triple-layer privacy protection, Zcash adopts zero-knowledge proofs, and Mimblewimble offers differentiated solutions for both blockchain and privacy systems. Whether it's individuals worried about asset exposure risks or enterprises concerned about their transaction data being accessed by competitors, the demand for privacy continues to rise.
So the reason privacy coins are gaining traction this year isn't because their prices are soaring, but because the entire financial world is essentially running naked, completely exposed. Assets on the blockchain are transparent, and regulatory bodies can penetrate this transparency. Coupled with AI profiling, these three factors together mean that everyone can clearly see who has how much money, who transferred funds to whom, and whether a company is thriving or not. Originally, blockchain was already a transparent ledger, but now it's even more extreme. It's as if everything is visible under a microscope. In this situation, it's only natural that privacy tokens are surging. They serve both as a means of self-protection and as a way to stake a claim in the future landscape of finance. Don't forget about privacy tokens, everyone. In fact, they're like a cake with thorns. The EU is restricting these highly anonymous assets, and Monero can't be traded on many exchanges anymore. But there's one thing everyone needs to understand. The more regulators fear something, the more it shows that it's something you can fully control yourself. Think about it. Doesn't that make sense? Now let's take a look at the Czech National Bank. The governor, Aleš Michel, is someone who really wants to go big on Bitcoin. He wanted to spend $730 million, which is about 5% of the central bank's reserves, to buy Bitcoin directly. But the board stopped him. The reason is clear. It's Bitcoin. Its price soars to the sky and crashes to the ground. The volatility is just too high, and the risk is too great. So the Czech National Bank took an indirect approach. They bought about 50,000 shares of Coinbase, worth around 18 million US dollars. If you calculate it now, those shares are worth about 15.7 million, so they've lost a little bit. It's like testing the waters with a small amount. The Czech National Bank has been preparing for more than half a year, and only now have they officially entered the market. They're probably trying to buy at the bottom.
The Czech National Bank, CNB, recently announced it completed its first crypto asset purchase, totaling 1 million US dollars. The aim is to test if digital assets can serve as reserves and to gain practical experience. The central bank stressed that, for now, crypto assets will not be part of official reserves and will remain separate from core assets. According to the announcement, this pilot portfolio includes Bitcoin, a US dollar-pegged stablecoin, and a tokenized bank deposit, forming the first experimental digital asset portfolio. The Czech Republic is looking into a Bitcoin reserve.
The attitude of this central bank actually represents that of most central banks. They're all hesitant and don't dare to be the first to take the plunge. Should digital assets be included in the country's strategic reserves, or should they just buy a little to test the waters? How exactly should digital assets be handled? How should these risks be isolated? Every country's central bank has its own considerations, but what I want to say is, when a trend arrives, whether you embrace it, ignore it, or resist it, the trend will come regardless. History has proven time and again that those countries that tried to block the tide with policies or regulations ended up being crushed like insects under the wheel of history, haven't they? So when faced with a major trend, we must go with the flow. Never go against the trend. As ordinary investors, we use our own money and our own choices to vote with our actions. The real question is, where should we stand? Let's take a look at the news.
Bitfirm's stock price plunged because the company announced that over the next 2 years, it will shut down all Bitcoin mining operations and fully shift its focus to AI and high-performance computing centers. CEO Ben Gagnon said this transition will take place between 2026 and 2027. Officially bidding farewell to mining on October 14th, the RMB surged directly to 7.09081, breaking through a one-year high. It seems the short-term momentum for appreciation is very strong, so a reminder was posted on X. The account of the liquid staking protocol Aftermath in the ecosystem has been hacked. Before the official team regains control of the account, do not click, do not trust, and do not take any action. CleanCore has updated its data. It has now accumulated 733 million Doge, worth about $120 million, and has stated that its goal is to acquire 5% of the circulating political supply. Currently, the price is around 16 cents, having dropped more than 25% in 3 months. Eric Balchunas, an ADL analyst at Bloomberg, revealed that Canary's spot XRP and F1 made a huge splash right out of the gate, reaching $58 million on the first day. Its trading volume instantly became the highest first-day trading volume among nearly 900 ETFs this year.
All right, let's move on to the haul. Many friends really enjoy our final haul segment. What I want to tell everyone is that to be a truly self-consistent person, you should never let your direction be swayed by the emotions of your friends or relatives or by any passing trend. How others see you is their story. How you walk your path is your life. Those who point fingers at you can only see within the limits of their own understanding. They can't see your true depth. So you really don't need to prove anything to anyone, explain yourself, or rely on anyone's approval. There's a powerful saying that goes like this: don't use your values to judge what I do. If you dislike me, what does that have to do with me? It's not as if my life will be elevated just because you like me. When your steps are steady and your heart is strong, the whole world will make way for you. You should know that people with a broad perspective are mature and calm. They don't fight, don't scramble, and don't try to please others. They only focus on their own growth and progress. If you bloom, the breeze will come naturally. If you are strong, rumors will fade away. So the greatest confidence in life is being able to keep being yourself no matter what others say. If you understood, feel free to give us a like. All right, that's all for today's program. Here we've included all of our membership benefits. We hope you'll join as a member and support our channel to make it even more professional. We also hope to lead everyone together through this cycle of bull and bear markets, so we can all gradually become wealthier. See you tomorrow.